back to Tax Chats, looking at all things international tax. In today's episode, we're going to look at an international dealing schedule and some of the common mistakes we see when people complete their schedule. So an international dealing schedule, or IDS, is lodged alongside a tax return, and it discloses all your international tax risks and transactions to the ATO, and it's used for risk assessment purposes from an ATO perspective. So it's really important to make sure these disclosures are complete and correct. Some of the common mistakes we see are people forgetting to do the schedule in the first place. So there are a number of trigger points for an IDS, and I think most people know about the $2 million threshold, and that includes the balance of any loans. So make sure you're also picking up them if you're looking at the $2 million amount. But there are other triggers as well. So if you've got CFCs, if you've got a branch operation, either inbound or outbound, if you have any payments of interest or royalties to non-residents, then it would also require an IDS to be completed. So understanding that is probably the first common mistake that we see. So make sure you're aware of these rules and completing it for your clients. So when you're completing this schedule, some of the other issues to be conscious of would be making sure that you're including items in the summary on question 3 and 4, and as well in the detailed section. So trading stock, in question 5, or services in question 8. Another issue is royalties and license fees being mischaracterized. So they're included in question 6, and you are required to disclose whether it's a license fee or a royalty. So that does require some level of analysis in understanding the royalty provisions. Another common one would be the percentage of dealings with documentation. So in the IDS, you are required to disclose what percentage of dealings have transfer pricing documentation to support that transaction in place prior to the filing of the tax return. So it's really important to see that documentation, understand what transactions are covered, and disclose it appropriately to the ATO. So a 6 would be 100% of the dealings have full transfer pricing documentation. Another common issue is forgetting to put in disclosures. So CFC disclosures can sometimes get overlooked. The active income test numbers, the attributable income calculations, or even hybrid mismatch disclosures, answering a no, but not really having looked at it or having support for that disclosure. So given these are all the high risk areas the ATO are looking into, it's probably best to make sure you're considering these and getting the right advice at the time. So that's a little bit about an international dealing schedule, or IDS, and some tips and traps to be wary of. That concludes my Tax Chat series on international tax, but I always release little updates in this space, so please feel free to connect with me via LinkedIn if you enjoyed the series.